Hi everyone, my name is Vanessa Huang and I'm from the Financial Intermediaries team at Capital Group. Together with me today is Budden, Investment Director for the Capital Group New Perspective Strategy. Andy brings with him over 30 years of industry experience and has been through many challenging market cycles in his career, giving him a very unique perspective of global markets and how to navigate through it. We are very happy to be on iFast TV today to share our latest views and where we are seeing exciting investment opportunities. Hi Andy, good to have you here today. I think we can all acknowledge that markets have been very volatile since the start of the year, and this has sparked some nervousness amongst our investors. So I would like to hear from your point of view, what is the probability of a global recession and how long do you think this will last?
Yeah, so most major economies are what we call late cycle. So they're late in the economic cycle, the business cycle, and it is possible that we will see soft landings, but it's also quite likely that a number of these countries are going to experience a hard landing. And this is really quite challenging for investors because when we see a recession, we often see a sharp decline in equity markets in particular. And whilst obviously investors are concerned about that, I'd also highlight that generally these bear markets provide a really good opportunity to start building a portfolio that can do really well over the next few years. And in addition, I think there's quite a lot of reason to believe that actually this recession, certainly in the US, won't actually be that bad because we've got a very strong labour market in the US. We've got pretty strong balance sheets, both for consumers and also for corporates. And in addition, more recently, we have started to see inflation come down a little bit as well. So it's quite a good starting point for an economic expansion.
So I'm hearing that your expectation is there will be a recession, albeit a much shallower one. How long do you think this recession will last, and should investors wait on the sidelines before they deploy their cash, wait for recession to peak before they deploy their cash?
Yeah, so some pretty important questions there. And actually, this is a situation where history can be a really helpful guide to us. So if I focus on the US, over the last 70 years, we've seen 11 economic cycles. And there's some important lessons here. So lesson number one is that actually recessions don't last forever. So the longest recession in the US was 18 months, but the shortest was just 2 months. And in fact, the average is around 10 months. And as I said just now, some reason to believe that this one might be a little bit shorter than average. I think the second lesson is that markets see it coming. So markets tend to discount the start of a recession around about 6 months early. They also discount the start of the recovery around about 6 months early. I think the next lesson is that a typical bear market will last for around about 11 months. This bear market has already been going for 14 months, so some reason to believe that actually we're closer to the end than the beginning. And the final thing I'd highlight is that whilst bear markets are deeply painful, so they last for around a year, and actually the market can go down by about 30% on average. Actually, expansions don't go on for 1 year, they go on for 5 or 6 years. And in addition, the market on average more than triples. And so that sends a very strong message that one of the biggest risks that an investor can take right now is not being invested when the market starts to recover. So it really is a question of not being too smart about market timing and instead building the portfolio for the next market expansion.
As an investor with some cash to deploy now, what type of companies do you think I should be investing in?
Yeah, so I think the first thing I want to say is that the right portfolio for today is different from the portfolio that was successful over the last 5 years or even the last 10 years. So over the last 5 or 10 years, we've seen a very strong bull market driven by what we call digital disruption companies. So these are companies that use technology and the internet to really disrupt their industries or sometimes actually to create new industries. And in addition, the successful investment strategy was all about paying for growth and, if necessary, paying high valuations for growth. So we're very confident that the future is going to be different. So a lot of these fast growth companies have started to slow down. And in addition, we're seeing the emergence of some new and very powerful global champions and secular trends. And the investment gain is going to be much, much broader in future than it has been over the last 5 or 6 years. In addition, I think the days of simply paying high valuations for a company that hopefully can produce growth 4 or 5 years from now, those days are over. So it's important to be much more focused on fundamentals and then paying a very careful valuation for companies with those attractive fundamentals.
Right, okay. So it sounds like growth investing is not dead, but instead we just need to be a bit more discerning on the type of companies that we're investing in. So Andy, maybe we can just cut through all the noise in the market. Tell me, what are you excited about right now? What are the investment trends that investors like myself should be focusing on this year?
Yeah, well, I'll give you a couple actually, and I'm going to start with healthcare. So healthcare it's always an innovative sector. However, today, I truly believe that we are going through a golden era of innovation in the healthcare sector. And a lot of it stems from big investments in research and development over the last 10 or 15 years, which is leading to the creation of more and more really, really effective drugs. So we're seeing an accelerating number of drugs being approved by regulators. These drugs are more effective than anything we've seen before. They're treating a wider range of diseases, and actually they're addressing much bigger markets as well. So for example, AstraZeneca is emerging as a leader in creating drugs for cancer, so real critical diseases. Another example would be Vertex Pharmaceuticals. They produce drugs for a very nasty genetic disease called cystic fibrosis. We're also seeing the advances in genetic therapy. In fact, the RNAi technology that was used in COVID vaccines, they're a good example of that. But we're also seeing drugs created for much more common ailments. And one example I'll particularly call out would actually be obesity. So obesity is unfortunately a global health emergency. There are estimates that there are more than 1 billion people struggling with obesity today. In the US, actually 1/3 of all adults are struggling with obesity. And this is a problem because it leads to all sorts of other kind of health complications. It can be cardiovascular disease, kidney diseases, diabetes, of course. In fact, the world today is spending 2% of GDP on addressing obesity. And so this is why we're so excited about companies like Eli Lilly and Novo Nordisk, which are creating drugs which really help people to lose weight. In fact, these drugs have been proven to help people lose up to 25% of their weight. So that's the golden age of innovation in healthcare. But another area I'd call out would be the changing shape of globalization. So during COVID, there were a lot of companies where they started to realize that they had probably made a mistake by spending the last few decades trying to build supply chains that were super efficient, low cost, just in time. Because when you have a big global pandemic, suddenly it became almost impossible for these companies to do business. And so looking ahead, their future is not low cost, just in time supply chains, but instead it's going to be resilient and redundant. And that's why we're hearing not a lot more about things like onshoring and reshoring. This presents some very exciting investment opportunities. For example, the semiconductor industry. We're seeing Taiwan Semiconductor build new facilities not just in Taiwan but also in the US, in Arizona, actually in Japan, and quite possibly in Europe at some stage as well. And this means the company called ASML, which makes a lot of the machines that go into TSMC's factories, their business has just got a whole lot more attractive. We're also seeing healthcare companies wanting to build more robust supply chains, and the answer to that challenge is Thermo Fisher, which is a bit like the Amazon of the healthcare industry. And the final example I would call out would be this whole concept of onshoring and reshoring. It's going to need a lot more construction. So Caterpillar makes increasingly energy efficient machines that can be used to get commodities out of the ground and then turn them into completed buildings. So again, a really interesting investment opportunity.
So I'm hearing a lot about healthcare innovation, reshoring, but what about this old theme of digital disruption? Is that dead? Can you share more on artificial intelligence?
Yeah, absolutely. So the first thing I'd say is that digital disruption is definitely not dead.
Okay.
It's just that it's no longer going to be the single dominant investment theme. So if we look at industries like digital payments, e-commerce, cloud computing, streaming video, actually the fundamentals, so the outlook for these industries over the next 10 years is still very, very strong. It's just that, once again, the days of paying kind of super high valuations for these companies in the hope that they might one day do well, those days are gone. Mm-hmm. So we need to be much more discerning about which of these companies we hold. But I think you're right to highlight artificial intelligence. So artificial intelligence is a technology that's been around, actually it's been around for decades, but it's also one of those new sciences where, you know, we as humans, we tend to be much too optimistic in terms of how quickly it will have effect. So we have to be much more patient, waiting for it to have effect. But then we tend to be not sufficiently ambitious with thinking how much effect it can have once it gets moving. And so we think with artificial intelligence, we're starting to get close to the moment where it really starts to accelerate upwards. And we're seeing that happen. Well, I think one which everyone would be familiar with would be ChatGPT. You know, we're using it for search, but we're also seeing ChatGPT write medical papers, write academic theses. We've even seen it produce pictures and music and video. So clearly we're at a stage where artificial intelligence is starting to have impact, and we're seeing companies in all industries thinking about how they can use artificial intelligence to create tools that will make their businesses more productive and higher performance as well. So how to invest in this? Well, we're certainly being very vigilant, looking for the real innovators. But one thing we absolutely know is that artificial intelligence is going to need a lot more computing power. So it's very, very positive for cloud computing. And that means that it's very positive for semiconductor manufacturers, so the likes of TSMC and ASML, but also companies like Broadcom and Nvidia. So a really interesting way to invest in cloud computing and AI today.
Okay, so just to sum up, three themes that you talked about. Firstly, healthcare innovation. Secondly, the changing shape of globalization. And lastly, the widespread adoption of AI. So I'm actually really glad to see there are some bright spots out there despite volatile markets this year. But Auntie, I think you made a very good point that this time it's different and we really need to focus on fundamental stock picking to drive portfolio returns moving forward. Thank you very much to our audience from iFast TV today. These are definitely interesting times for investors. While some might feel unprepared for this new reality of global markets, Capital Group is fortunate to have gone through multiple market cycles throughout our more than 90-year history of investing. A prime example would be Capital Group New Perspective Fund, a fund based upon our flagship strategy in the US that is designed to take advantage of evolving global trade patterns as well as economic and political relationships. In short, the very sort of environment we are in right now. For more information on the New Perspective Fund or additional investment insights, please feel free to visit our website at capitalgroup.com or the various iFast platforms. I hope to see all of you again soon.